What's up? Good day, good evening, everyone. Welcome to another episode. Welcome to Uncensored, the truth about money. Thank you so much for joining us. We are on episode number 4, season 2, episode 4. We've come a long way, hey? Thank you so much for being here. So as we had mentioned when we started with episode 1, that this whole season is dedicated to businesses. So whether you are starting out or whether already you have an operating business and you'd like more information as to how you want to do things correctly and so that you can generate profit. So we are here to offer that advice, but please remember this doesn't constitute as financial advice. So if you need professional advice, you know who to speak to. So we had to bring him back again. I'm with V, but sometimes the financial guru. We must find you
I'm just a guy.
the
Don't
accounting
complicate
guy.
it.
That's a good one. The accounting guy. V, how are you, man?
I'm good, man. I'm good. I'm good.
It's good to have you back, bro.
Yeah, man. Thanks for the invite.
Sure.
Yeah. I love speaking about these business stuff.
Yeah.
So
I love it on that episode we recorded. I think it was episode number 2 or number 3, accounting and bookkeeping. Um, uh, after that, when Tommy saw it, I think he was very excited because we're saying that I think this is one thing that he needed for his business, just that the reminder and advice on how to make sure everything is recorded, and because you can be able to track sales you've made and how to make things better, so what I'm basically saying is you have advised the financial guru.
that's cool. So I'll send him my bill. Thanks for letting me know.
So let's get into today's topic. So we're talking about tax today. So that's business tax.
Sure.
And I just have a few questions for you, and hopefully we cover what people would like to hear. So my first question, from unless you have something maybe to say just before we start.
No,
with
no.
my question.
Let's get into it. Let's
All
get
right,
into it.
sweet. So what is turnover tax?
All right. So I think before I can be able to answer that question, let me just speak generally, right? So businesses like corporations have different types of taxes that they pay. So there's income tax, which is a tax on your earnings as a business. There's VAT, which is a tax on transactions. There's capital gains tax, which is a tax on the sale of assets. So say you buy an asset today and you sell it tomorrow at a higher price. They'll say that asset is appreciated in value, and so you must pay capital gains tax, which is a very technical, but it's a different type of tax. There's donations tax. If someone makes a donation to someone, there's a tax on that. So, with that said, right, turnover tax was designed specifically for small businesses. What SARS refers to as micro businesses.
Sure.
So these are businesses defined as businesses that have a turnover or revenue or sales lower than R1 million.
Okay.
That's crazy, actually, when you think about it. That
Yeah.
any business that gets R1 million or less every year is considered a small business according to the
that
tax
is.
man. So it just makes us think about how we view our businesses. There's a whole ocean of money out there, right?
True.
So the whole thing with the turnover tax, the spirit of the legislation is it's meant to assist small businesses from the admin and the burden of all these different types of taxes.
Okay.
You can imagine they're all quite complicated, like the area of taxation.
Yeah.
Like even me going back to school, tax was a problem. It's very complicated. There's the whole legislations and stuff. That's one, the complexity, right? And there's a lot of admin required with lodging these taxes and payments, and it's the SARS e-filing website has a lot of tabs there, so it can get very complicated. And typically, a small business, it's a one-man show. There's not a lot of resources to hire out an accountant or whatever, or tax consultant. So the owner of the business would typically do it by themselves, right? And so SARS understands this. So they said turnover tax is available for businesses that are lower than the threshold of 1 million a year, and with that turnover tax that they pay, they are exempt then from paying all these other taxes. It replaces, so turnover tax replaces Income Tax Act. It replaces VAT. It replaces capital gains tax and the donations tax. All of this is one. So they're saying we're going to tax you once. We're going to tax you once for turnover tax, and that's it. You don't have to worry about all these other things as long as you are still small. But very important, businesses have to register. It's not just because you are 1 million rand or under a year business that you qualify automatically. You have to register with SARS. So you'd have to go through either the SARS website or go physically to SARS. Until you're registered, it doesn't just apply automatically. I think that's the point I'm trying to make. Yeah.
Sure. And then obviously, the other types of taxes that you've mentioned, obviously those are for like big corporations, 1 million and above.
Sure. Yeah.
Yeah.
Yeah. So those other types of taxes apply completely to, like you said, businesses that are not falling within this little bracket.
Sure. So as a small business owner, your only concern and worry is just turnover tax.
Yes, but you have to register.
have
I
to
think that's important.
So SARS won't come to you just because you have a business. They
No.
won't come to you.
No. In fact, if you do the numbers, you'd pay a bit more if you were not registered for turnover tax. Let's say you had a business that earned below that 1 million rand threshold, and you were paying for all these other things. You'd find that you actually pay more. So this is a relief for small businesses. And remember, SARS is in the business of collecting money, and they're doing this as an incentive for small businesses to actually register for tax. Because you'll find a lot of small businesses don't register for tax. So that's the incentive they're giving, saying we're taking out the complexity, we're taking out all the admin around it, and it's slightly less than what you would pay normally.
No, I feel you. So with this, how much percentage do you get charged? Is there like a fixed rate or?
Yeah, so it's a bit complex, right? So there's a sliding scale that they use. So the first, I think it's about 335,000 or so of your turnover in a year. So remember, this is a tax on your revenue. So if you look at your income statement, you just take the top line, sales.
Sure.
So let's say your sales are 1 million for a year. They say the first 330,000 or 335,000, I think is the number, of that is exempt. So you don't pay any tax on that. So if your business has made 335,000 or less for the year, you're not liable for tax. Then the next layer is between 335,000 up until 500,000, and that's 1% of your sales.
Okay.
So that 170,000, 165,000, between 335 and 500,000, they charge 1% of that.
Okay.
If your business is over that, then between 500 and 750,000, they charge you 2% of that. So it's a combination of all of these. That's why I'm saying it's complicated. It's a sliding scale. So it's in stages. So between 0 and 335,000, you don't pay anything. Between 335,000 and 500,000, you pay 1% of that. Between 500 and 750,000, you pay 2%, and then 750 to 1 million, you're paying 3%.
Sure.
And then obviously, if you're above 1 million, you're outside of this. So the normal legislation would apply.
Sure. All right. So when is this payable?
Yeah. So it's payable basically over 3 payments. So there's the TT02 return, which is essentially a payment form that you submit via the SARS e-filing platform. So it's a return, just declaring what your estimated sales will be for the year, based on how much you're seeing, based on your own knowledge of your business, right? So that first payment, so it's divided into three. So the first payment is payable in the middle of the tax year, so payable by the end of August,
Okay.
which is essentially half of what you would pay for the full year. So you'd estimate what it is for the full year, your turnover. Let's say you're estimating 500,000. Um, and so you estimate 500,000. You'd pay half of what you've estimated, or half the tax implication of what you've estimated as your earnings for the year,
Okay.
right? So that's payment one. Then this next tranche of payment is at the end of Feb, which is the end of the tax year. Then essentially, that becomes your full year view. So remember, we've paid that based on the first estimation that we did, right, in August. Now comes February, and actually my sales are 600,000. I see that my sales are actually going to be 600,000 for the year. So now I pay based on 600,000 less what I've already paid in August, right? Then there's what the form they call the TT03, which is the turnover tax return. That you do once a year, and that's when you've had your numbers verified by an audit or whatever, and you have your financial statements, and your numbers are final. You submit those final numbers to SARS using the TT03 form. And from there, obviously, then if you are over and under, you might receive a refund or pay the difference. Remember, you've paid two payments, which represent the full year, based on an estimate. Now
Yes.
that you have actual numbers,
Yeah.
you might be over or under, and that's the purpose of that form, to have one final return, and then you might have to pay a third payment. You'd find that maybe you only make two payments, but you submit a return three times. So the TT02, you do it twice a year, one by the end of August, the second time by the end of February, and then the TT03 form you submit only after then your financials have been verified, etc. And that runs together with the normal tax season of tax returns for individuals, which is typically from July until end of November. Yeah.
But obviously, is this like stuff that's easy for, let's say, I as an individual run a business? I won't need any third party help in terms of that. Can I just do it on my own?
Look, me as an accountant, I would say to you, no, you need the help, but that's like just the consultant in me.
Yeah.
But SARS has made it easy using the SARS e-filing website.
Okay.
It's actually very simple.
Yeah.
And they have tutorials. They have consultants. You can call SARS. There's an online assistant as you're submitting there. So if you need any help or with anything, generally they have good FAQs on their website. So if you're struggling with something, just go to sars.gov.za. I think they 99% of your tax questions are probably answered there. So I think it's simple enough, and this is from me, who's done tax in the more complex way. The forms are very simple; they're very self-explanatory, and there's enough resources available on the net if you get stuck. Yeah.
Hear you. So let's move on, right? What is meant by provisional tax?
All right. So let's forget about turnover tax for a bit.
Sure.
So now we're back to the default legislations, right?
Sure.
So provisional tax is SARS's way of collecting money for businesses that are paying income tax, which is like the base tax. That's a tax on your earnings. Income tax is basically taxing your what they refer to as gross revenue, or yes, gross revenue, less deductible business expenses. So they have rules. How do they define what is the revenue according to SARS, and whatever deductions that you can take, or expenses that you can minus from that revenue to come to a net income tax, taxable income. I think that's the term that they use. Right. So that money needs to be collected. So provisional tax is the way that SARS collects that money. Remember the TT02 form that we spoke about with turnover tax? Provisional tax is the equivalent of that, but obviously for businesses that don't fall within turnover tax. So same principle applies. You pay it in two tranches, one in the middle of your financial year, the second payment at the end of the financial year, and then there might be a third one once you submit your income tax return. That's all provisional taxes. It's just a way of SARS collecting money. So you pay half during the year. After 6 months, you pay the other half at the end of the year.
Right. I think my next question but you've answered it. So it's still basically paid by businesses or companies.
Yes, yes, yeah.
Yeah. All right. And then what is meant by payee tax or pay as you earn tax?
Sure, right. Hey, so tax is complicated because there's a whole lot of different types of taxes, right?
Yeah.
Individuals. So by individuals, I mean people that are not companies, right?
Sure.
We have to pay tax, as you would know, right? All of us have to pay income tax as individuals. SARS needs a way to collect that money. Similar to provisional tax, that's a way for SARS to collect money from businesses. Pay as you earn, or PAYE, is how SARS collects money from individuals. So, and typically it's in an employer-employee relationship. So let's say I'm employed by my employer. Every month, my employer takes a portion of my income based on a calculation and best estimate that this is my liability to SARS based on my income. They basically take my monthly salary and they extrapolate it for the year and estimate where I fall within the sliding scale. Remember the sliding scale we talked about with turnover tax?
Yes.
Individuals use the same thing. There's a sliding scale based on how much you earn per year. So there's a whole complicated calculation they do, and then they take that money monthly. They basically do this because if you were to leave it to individuals, right, and say, please pay us, people wouldn't pay. Some people wouldn't pay.
Definitely.
So they charge. Then they charge companies, saying, please collect on our behalf, because you guys pay these guys and pay employees every month. So just take a portion of that every month. It's not the employer necessarily that's paying. It's still the employee, because the employee is funding all of that. The employer is just the facilitator of that whole thing.
And obviously it's monthly, right?
Yeah, but here's the thing, right? Before we move on, it may happen that your employer does not collect the right amount of PAYE a month, right? That's scenario number one. Scenario number two, let's say you have other income. Let's say I have an investment property that I'm getting rental income from every month.
You as
That
an individual, as an
as
employee.
yes, me. So let's say I have a flat somewhere and people are paying me.
Sure.
My employer doesn't see that income, right? They don't know about that.
Yeah.
So this is where when we submit, this is exactly why we submit tax returns every year. You know, when they say it's tax season,
Yes,
like now
yes.
in July, this is why we submit. Because then me as an individual, I declare to SARS, this is the amount of money that I've made. I've made this much from my employment contract. I've made this much from maybe my investment property. I've made this much from whatever other thing, whatever other source of income that you have, right? And you declare that to SARS. Remember, SARS has only collected on what relates to your employment. They've only collected that. So if you have other sources of income, when you submit your tax return, you'll find yourself that you have to pay the outstanding amount, which is relating to all these other sources of income that haven't been collected. And a lot of people, I guess, are ignorant to this thing, because you'll find that people are found with big liabilities that they didn't expect. So it's important. I know a lot of small businesses, a lot of people start with side hustles, right?
Sure.
That I'm working somewhere, then I also have a side hustle. Keep record of what what you're making as in your side hustle number one, and also put money aside for any potential tax that you'd have to pay, because once, like in my example, with the investment property, if I'm not putting money aside, I'm gonna be sitting when I submit my tax return with a huge bill now that I have to pay once off. Because SARS wants their money, and they want money from every source of income, not just from your employment. So that's just an
That's a
important thing.
good point you're raising, because I'm even thinking, like, let's say people that are, which is exactly what you're saying, like people that are self-employed, like for example, musicians who
Sure.
get money on gigs, creatives who,
Yeah.
basically, so you have a responsibility to go to tax and inform them of your sort of like earnings.
Yeah, and that's why, back to turnover tax, it's one of the reasons why they put this system in there. If you're, let's say you're self-employed, if you were to register as a micro enterprise for turnover tax, then you wouldn't have to worry about these systems, because now there's a formal way of SARS collecting, and they divide it for you. They try to divide it 6 months, every 6 months at least. That's better than having one bill now to sort out. And because you know that it's coming, you are better able to put money aside. If for every 100 rand that I make, I'm putting aside 20% of that, and that's for. And that's a very good point. Yeah.
Yeah, hectic tax. So let's just move right along. So can you please just explain dividends tax?
Yeah, that's another complicated piece of legislation, right?
Okay,
But in a nutshell, you said dividends tax. Sorry.
dividends tax. Yeah.
So with dividend tax, SARS, like, you must understand, SARS takes money. They look for stuff to take money from. So dividends typically are when there's a shareholder and there's a company, right? And sometimes that shareholder is a company, but let's keep it simple. There's a shareholder who owns shares in a company. Let's say I own 100% shares in Sipo's Tuck Shop,
Sure.
right? And Sipo's Tuck Shop makes a certain amount of money, and at the end of the year, they decide to share some of those profits with me,
Sure.
and that's a dividend. Basically, SARS is taxing a portion of that dividend. They're saying, no, there must be a tax for that.
Yeah.
Yeah, like I said, it gets very complicated. There's a whole lot of exemptions and stuff, but basically,
Yeah.
they're collecting money for what was paid,
Yeah,
what was declared by a company to a shareholder. That's
Yeah.
basically it.
So, but then now I'm thinking with all of these. So this is information that you have to know for yourself. Like, there's no one that's gonna come to you and be like, okay, since all you are getting this money from this direction, you need to pay this. So it's literally your responsibility.
Yeah, yeah. No, it's important that we educate ourselves, right? And that's, I guess, the spirit of why we have this
Yeah.
podcast. Um, and this is typically why you find a lot of people being chased by SARS or the IRS in the US, or any other revenue regulator, because they'll claim ignorance. They say, I didn't know, but SARS doesn't care. They want their money,
Ish.
right? And it's important, as we must always have a big business mentality. I think I mentioned this the last time I was here, that I must think of myself as a big business, so I must understand the implication of big business. So, like, from the beginning, from the onset, register for your company for income tax. Understand, sit with someone. It's free to sit with someone from SARS. You don't have to pay them a thing. It's free to just go on the internet and read through some of these things are very well written. They're very easy to understand. And I'm sure there's a whole lot of articles, etc., that are online that people have written, thought leadership and all of that around this tax thing, and it's important for us as entrepreneurs to educate ourselves with these things, or else we'll be caught napping. And when SARS comes for you, they come for you with penalties. Like penalties, they say, because you didn't pay on time, we're charging you. That's one. they come with interest as well, saying the money that you should have paid us 2 years ago, 3 years ago, 15 years ago, we're also charging interest, and that's based on the number of years. But because SARS just wants to collect the money, and they want to be lenient, there's what they call the VDP, or Voluntary Disclosure Program, that SARS has. And that basically says, if you know you haven't been compliant as a taxpayer, whether as an individual or as a business, voluntarily, and you know that it dates back maybe to a while back, like last year or 3 years back or whatever, you can voluntarily declare, saying, I didn't declare and pay as I should have. I want to declare it now and I want to pay. Then they can look at how they can forego the interest and the penalties, so that you pay what you should have paid, or work out some sort of a plan. SARS is not the bad guy here. They just want to help us. A lot of people don't know these things, that there are voluntary disclosure things. It's better for you to come and ask for forgiveness than for SARS to come later they just collect. Yeah.
Sure. So with dividends tax, when is this one payable?
Let me just remember. I haven't done one in a while.
Yeah.
I think it's payable 30 days after the dividend has been paid. I think something like that. Yeah, I think it's payable 30 days after the dividend has been paid over to the shareholder.
And obviously, all this information is available on their website.
Yes. Yeah. So don't take my word for it.
So, guys, you've heard it for yourself. Thank you so much for joining us. I mean, it's a lot of information, and it's only right that you do your own research. And as V has said, all this information is available on their website, SARS. So if you just go on Google, just SARS, you will be redirected to their website. So don't take chances. Whether it's okay, you're just a hustler, a musician, you're getting maybe gigs then and there. So just make sure you're on the clear. Don't then be, as he said now, don't act ignorant. So with that said, V, thank you so much for coming, man. Really, really appreciate it. So don't forget, we are on Instagram, uncensored_the truth about money. If you have any questions, please do send us your direct messages. And if you are listening to this podcast, whether on Spotify, Apple Podcast, or Google Podcast, please know that this podcast is also available on YouTube. And if you are watching it on YouTube, as I just mentioned now, this podcast is also available in audio on Spotify, Apple Podcasts, and Google Podcasts. So from our side, thank you so much. As Tamza always says, do your research. Thank you.